Your wallet is about to feel the ripple effect of global shipping bottleneck, a massive banking move, and a freezing house market. But stick around until the end of this video because I'm going to tell you exactly how surprising overnight breakthrough in the Middle East might actually save you some cash at the petrol pump this week. First of all, let's start with Cooperative Bank rises rates and retail spending flatlines. In a simple word, it means the Cooperative Bank just made it more expensive to borrow money for your house, but they're paying you more if you lock your savings away with them. Because borrowing is so expensive right now, Kiwis have officially stopped spending retail because retail shopping over May completely flatlined because everyone is tightening their belts. What are the pros for now at the moment of this? If you have a cash sitting in your savings account, you can get better return on your term deposits. What are the cons for now is if you are trying to buy a house or roll over your mortgage, your weekly payments are going up. Local businesses are suffering because nobody is walking through the door to buy things. What are the future effects of that? Expect retail shops to start pushing aggressive sales and discounts soon to try to force people to spend. Well, global choke points and the wholesale swap rate jump. In a simple word, it means a massive shipping traffic jam has formed in the Middle East. Only four ships crossed a critical global trade route, the Strait of Hormuz, in 24 hours, leaving 250 massive ships stuck waiting. Because global trade is at risk, wholesale interest markets panicked, which pushes up the underlying cost for long-term borrowing in New Zealand. What are the pros? None. This is a pure global friction. What are the cons for now? When wholesale rates rises, it signals to local Kiwi banks that they need to keep mortgage rates higher for longer. It also threatens to make anything imported into New Zealand more expensive due to the shipping delays. What are the future effects? If that shipping bottleneck isn't cleared soon, the cost of everyday goods in New Zealand's shelf will tick upward in the coming months. Sailnet and Raymond corporate move. Well, two huge Kiwi companies that have been struggling for a bit lately are finding ways to get cash. Dairy giant Sailnet is finally making progress to secure the money it needs to stay afloat. And a retirement village giant Roman Healthcare is launching a new setup to borrow money from big investors. What are the pros? It prevents massive corporate collapse, which protects Kiwi jobs, keeps our vital dairy exports sectors moving forward. Cons for now, it shows that even our biggest companies are having to scramble and pay high costs just to secure cash right now. What are the future effects? Well, in future, its stability for these companies means the wider NZ share market avoids nasty shock, keeping Kiwi saver accounts a bit safer. Well, let's come to the property now. The housing market has gone into a deep winter freeze. There are heaps of houses up for sale across New Zealand, but almost nobody's buying them at auctions because the buyers are terrified of higher mortgage rates. For now, it means if you're a first home buyer with the deposit ready, you have a total Israel and Iran agreed to tentative ceasefire. Before this, oil prices were skyrocketing towards $98 a barrel, which would have destroyed the Kiwi dollar and sent our petrol prices through the roof. Because of the ceasefire news, oil prices plummeted back down to $94 overnight and the Kiwi dollar bounced back up. What does that mean for you? It means immediate threat to a massive spike at the fuel pump has been avoided for now. Drop a comment below. Are you locking in a term deposit or are you waiting out this crazy housing market? See you in